I'm Greg Hunter. Welcome to USAWatchdog.com. We're the guest we haven't had on since July. Back then, the Fed was touting that the economy was going to do great. It was continue to go on. They were going to raise interest rates. But my guest back then, who was an expert in financial and geopolitical cycles, said, economy is going to turn down. It's going to get worse by the end of the year. And of course, I'm talking about Charles Nenner of charlesnenner.com. You're world-renowned, Charles Nenner. Thanks for joining us today on USAWatchdog.com.
Thanks. You always know when you say these things, I'm interested myself what I'm going to say. So let's see.
Well, let's talk about the big cycles. I mean, not long ago, China was talking, just in the last few weeks, talking about they have to get ready for war. And that's one of the things you said was the real hot spots in the world, not the Middle East. You said China. Over in Asia, over in that part of the world is the hotspot. Tell me about your big cycles for. Let's just talk about geopolitical cycles right now. What's going on with your big cycles that you see going on?
Well, let's just repeat it for people who didn't always follow us, that we say that every new century, in the second decade of the new century, slowly big wars develop. So we said that should be now. It was the First World War. It was in 1814-15 was Napoleon. Before that, it was the Habsburgs. And I told people, if you Google big war around the year 200, 300, 400, 500, it's always in the middle of the second decade. I have no clue why, as I don't have a clue why cycles on stock markets and interest rates work that great. So slowly, something is cooking. And we're still in a dangerous period. It's still, according to cycles, anything can happen. Now, those years ago, we discussed where would it come from the Middle East. I says, I don't know. I don't think so. I think there's going to be more a problem with China. And I still think there's going to be a problem with China.
And do you think that problem is getting worse with them in the news reports saying that they're actually saying they have to get ready for war?
Well, that's not my expertise. My expertise is in cycles. And when things happen and why they happen, anything can happen. Look what happened with Saudi Arabia, which, by the way, is very strange because they threatened that they will get the oil price through the roof, but cycles were down. So what happened? Oil price went down. So you never know how the news is going to influence something. So that's not my expertise. I don't think it's anybody's expertise. My work is to tell what's going to happen and when it's going to happen and why we will see in the future.
When do you think there's war with the Asian continent, with China or in Asia? When do you think that happens?
I don't know. I just know that from the middle of the second decade, we talk about 2015, 16, for the next couple of years, is a very dangerous period. Like in stock markets, as you remember, we said we're going out because the end of 2017, our long-term cycle stopped, and since then, anything can happen. What exactly happens? I don't know. You can later say Trump said this, Trump said that. We don't know what happens. It's just time to go out. And then we play the bounce. And then in July, when I came in, I says, two things are going to happen. First of all, this market is going to tank. And second of all, the economy is weaker than everybody thinks. And if you remember, I questioned, doesn't the Fed have the same cycle programs that we have? Obviously not, because they go from month to month. And we can go from year to year, so we can say where the unemployment is going, where the inflation is going. And maybe you remember that I had a problem with all the so-called experts that say, well, the economy looks good because unemployment is low. And then I showed that going down back 50 years, whenever the employment is 3.7, 3.8, is always the end of the bull market. And they still continue to say the same thing. So I don't even get it that they can say whatever historically is totally incorrect. So investing is not so complicated. You just have to do some work and see the patterns. And the same thing with the war situation. I don't know what's going to trigger. I don't know what's going to happen. We're just in a dangerous period.
Do you think that the markets? You think that Donald Trump, when he says things like the Fed is crazy, they're tightening rates too much. You must think they're nuts because you're saying the cycle going down, and yet they're tightening rates. So, you called that. So, is Donald Trump right? Ron Paul also said, yes, the Fed is crazy. Do you think Donald Trump is right when he says the Fed is crazy and they're his biggest enemy and they're tightening rates too much? What do you think?
Well, we don't know the background. Maybe what they do is they tighten it. I think the market is expecting 3%. And so they can lower it after that. If they don't tighten it, there's no way to lower it. So who knows what they're thinking of? The interesting thing is when the whole market is counting on 3%, and actually in the outlook nothing has changed, why did the market come down so big if nothing has changed? So that's the interesting thing with cycles. When cycles are down, suddenly the same news is considered to be very bad, and the news was already there when cycles were up and nobody was interested. So whatever they do doesn't make such a difference. If he has a point or not, I'm not sure.
And you're thinking that the whatever little bounces that we're getting here and there, you're thinking overall the stock market has topped, and this is what you said back in the early part of 18, end of 17. You said it's going to top out, we're going to get out, and it pretty much did. And we're talking about big money here, so not just a few little moves. You're talking about people with billions of dollars that you're consulting for, also, along with regular people too that buy your research. We'll talk about that at the end. Now you have some free stuff, some free trials to give away, but you're saying that the market is going to be down for how long, and when does it bottom?
Well, first of all, short term, around this week, around the 6th, 7th of November, there's a short term low. So we expect a bounce. And there's a better low the middle of December. So we should have a year-end rally into January. But longer term, the market is down for the next couple of years. I just remember that in 2000, when the market tanked, there was an expansion of 11 years. And I still remember that on CNBC, it says, how could it be so stupid? We thought it would never end. So it's the same thing now. The expansion is so long, so people think it will never end, which will be the first time in maybe 100, 150 years. And I wouldn't count on it. Out cycles that we also sent out on the GDP shows that from now the GDP should go lower. Employment should go up. Inflation is not going to be there. On the contrary, I'm more worried about deflation and inflation when the economy turns down. And it's a whole total different ballgame than anybody thinks.
When you talk about deflation, a lot of people think that as is prices going down, but it's really debt destruction. It's like Donald Trump, and I've brought this up many times, and it's just very instructional. That's why I bring it up. But it's a big number, especially to Puerto Ricans. There's $74 billion in bond debt, and Donald Trump says we're going to let that go. You're talking about that kind of deflation. Talk about debt destruction, bond destruction. We're just not going to liquefy those bonds. Talk about that.
Well, again, that's not my expertise. It sounds a bit. I'm not more knowledgeable than other pundits, so I don't like to talk about these things. What I know is mostly about the textbooks. I'm not an original thinker in the fundamentals. So, for instance, we're waiting to buy the bonds. Actually, the middle of November. That's already in 2 weeks, 2.5 weeks, for a very, very nice rally. Where it comes from, I'm not sure. And why that is, I'm not sure. And that's our work. And why that happens, you might ask people who know more than me. I tell you what I know, and I tell you what I don't know. And I don't know more than other people, so I don't want to say too much about it.
But you're thinking, but for interest rates, a lot of people are sounding the alarm. The interest rates are going to go up, up, up. And you're saying no, no, no.
No. They're going, especially on the long side, they're going down. I mean, they're still going up now. The bonds didn't hit the bottom, but they should in 2.5 weeks.
And what do you think will happen then? Do you think it'll bottom there, or what do you think will happen?
I think there could be a very interesting move on the upside, and it's worthwhile playing the bonds, and it will surprise everybody. By the way, I forgot to mention that we did go long a couple of days ago in Facebook and in General Motors. And the moment we get a buy signal, which is very close, we want to go in the bedrock also. So then we have 3 stocks long for the moment. So we pick and choose where the cycle look good. I mean, General Motors up 20% since we bought it, just because of the cycle. I remember writing, I don't know why that is, but the cycle is up, so let's just buy it. So I don't know so much more than other people. But the interesting thing is also when we showed the top on Amazon, I said, well, it's very hard to go and to go against Amazon, but I have to show what it's like. And look what happened to Amazon. I'm not even sure if the news was that different than when it was above 2000, but the cycle worked on Caterpillar and Triple M and Amazon, and everything was tanking very big. So it's the interpretation that the markets give to certain numbers based on how they feel, and how they feel is based on if the cycle is up or down.
There's a lot of people out there talking about corrections, big corrections. One of them is one of the bigger, I can't remember who it was, it said be prepared for a 70% market correction soon. Evidently between now and the end of the year. What do you think about predictions like that? That we're going to get a huge correction this year?
Well, that has been my projection. That my prediction already for the last couple of years, but it should take till the end of 2021, beginning of 2022. And based on my cycles, it's not going to happen till the end of this year. On the contrary, we should start some bounces soon.
How low do you think it'll go?
I think we're very close to the lows. We covered the shorts a couple of days ago. And like I said, we're already long Facebook and General Motors, which I would not do if I really would think that the market is tanking. And I think that we're going to have a bounce starting this week.
So you think you think by the end of the year we'll go lower in between now and the end of the year, and then we'll have a rally towards the end of the year?
No, I think that from this week, starting the 6th, 7th of November, we should have a bounce, then come down a little bit for a better low the middle of December, and then have a very nice rally into January before the whole thing comes down again.
How ultimately, when you talk about your cycles going, out into the future, into 2020 and 2021, how low will the market go? I mean, you've said this, I think, in the past. You're expecting a Dow 5,000, and I don't want to put words in your mouth, but how low do you think it will go?
Dow 5,000.
That would explain. People will think, "Oh, come on, Dow 5,000." But you're a smart guy, and you've been doing this a long time, and please explain what this is not a crazy, off the top of your head.
No. Okay. I will explain it.
Okay.
If you go to my website and you look on the first presentation on CNBC in 2006, the market was 10,000, and then Becky Quick says, "Where are we going?" I says, "We're going to 14,300, and we're going to be there the 27th of December 2017. It's 2007." And then you see I came back on the December 27th of 2007, and where were we? 14,300. So the point is,
I don't mean to laugh at you. I don't mean to laugh at you. I just want to explain.
Yeah.
I don't mean to laugh at you. It's just that I'm laughing because you were right again. So anyway, go ahead.
So I didn't know what the economy was going to do for 1.5 years. The only conclusion you can come to, it has nothing to do with what happens in the world and the economy, because I knew the date and I knew the level. Then we projected the low, and then if you look again on CNBC for March 2009, when everybody was really doing in his pants, I said, now we buy everything. But projecting down from that low, like projecting up from the high of 2000, getting to the high of 14,300, if you do the same system that I developed going down from the low of 2009, I get down to 5,000. So it's pure mathematics.
And that's where you are. That's where you think it'll ultimately shake out at about Dow 5,000.
Yeah, but again, I want to tell you that in the 90s, it was also 6,000, 7,000. So don't think the world is going to stop, because we still had a reasonable, nice life in the 1990s when the Dow was around 6,000. So it's not the end of the world.
How about gold? You said that gold wouldn't, in the last interview in July, you said, there's a little more pain left for gold, but I don't think it'll go down that much. And I think it's going to go, ultimately it's going to go way up. Would you give us an update on gold and silver, please?
Yeah, silver is really not much to say about, doesn't move. Gold, I think we're short. And then I think we should at least go to 1150. It takes a little bit longer to rally, so it will take a couple of more months, but our target is 2,500. Now, again, I want to repeat that people say, how can you look for no inflation and gold going up? And I want to repeat, if you look at the history of finance, most bull markets in gold were in deflationary periods, not in inflationary periods. So why in deflationary periods? Because if everything loses value, people are going to run into gold because at least they have something. So that's the reason why in inflationary periods, gold goes up.
And when you say people are going to have something, the bonds go poof. I mean, the bonds aren't payable, right? I mean, we went from
Yeah,
100.
they're going up, but a certain problem we're going to have illiquid situations like in Puerto Rico or in Greece. And although the economy is weak, the interest rates then will go through the roof because there's a liquidity problem. So then bonds will tank also. Again, not because interest rates should go up, but the market decides that interest rates should go up because it's too dangerous to lend out money.
And I wanted to talk about. You made a comment about silver, and a lot of people who invest in silver think silver is, highly undervalued. That they're going to need it in all this technology. You're not a fan of silver. It sounds to me. You say it's not going to move very much. Is that right? Will you give us your thoughts on silver?
Well, between us, didn't we hear that for the last 10 years? It's good for industry, and silver is trading around 14. And the same level where it was 10 years ago when it says silver is the place to be because it's good for the industry and gold is worth nothing, actually, but silver they need. Silver is also going to come. Right now, I don't see it moving much on the upside or on the downside. So since we like to give a nice rate return to our clients, and it's not always in stocks, so we make it in natural gas, in crude oil, in gold, in the currencies, and we're doing very nicely. Even that stock markets are not doing well, because not everybody wants to be short stocks. They like to be long, so we're long in natural gas and in the dollar index, etc., etc. And silver is just quiet for the moment. Of course, it's going to move also when gold moves, but for the moment, I don't see any potential.
So ultimately it will go up with it'll
Right.
be drug up, kicking and screaming along with gold. Is that right?
Right, but I just want to tell the story that it's important because it's used in industry. That is an old story, as you know, and it didn't move silver at all.
All right, good. And then what about the dollar? You're saying you're investing in the dollar. You think the dollar will get stronger, and rates. You're saying that rates aren't going to go up, so the dollar is going to get stronger, or is it going to get weaker? What's your view on the dollar? Is it going to get stronger,
Well,
or is it going to get weaker?
short term, starting now, the dollar should become weaker, especially if the dollar index that is now 96.5 goes below 96. I think it will go lower. And I think next year we will see the euro surprises on the upside.
Oh, really? Do you think that the Italian banks are in trouble over there? Do you think that Brexit's going to be a problem? Evidently there's some problem with French banks as well, having some liquidity problems and debt problems. Is the banking system could it pull the European Union down?
Well, if you look at the bank index of the European banks, it's really looking very, very badly. I have been saying for years that we're going to break up in a northern euro, maybe something Scandinavia, Germany, Belgium, Holland, and the weak euro, the southern euro, Italy, Greece, maybe France, because those countries cannot devalue their currency, so they cannot get out of trouble. And it goes very slowly, and I still don't think this situation is going to survive.
Wait,
Especially
you don't think the European Union the way it is now is going to survive?
I think they're going to cut it in two, like I said, the stronger northern euro of northern countries and the weaker southern euro.
And what about? One of the stocks I follow is Deutsche Bank because it's a monster bank, and they've got all these derivatives. I know 40, 50 trillion dollars. They have a ton of leverage, and they ducked underneath $10 a share, and also General Electric not doing very well either. But let's just stay with the banks. Does that scare you? Does that cause for concern? Deutsche Bank being 9 and change. Does that bother you?
It bothers me especially because the DAX and Euro markets didn't really, well, they came down, what is it, 10, 15%, but they're really not tanking, and already Deutsche Bank and other banks are doing very badly. So it's really concerning. Nothing has changed. I'm sitting in Amsterdam, and I'm very involved in these things, and I advise the politicians over here, which have no clue how to deal with this, because almost nobody studied finance. And there's just no knowledge over here how to deal with these things. But the banks have still the same policy, and they didn't change it.
Well, could Deutsche Bank bring down the world? Could DB could it go into a free fall and be $7, $6, $5, $2?
Well, the question,
Could it turn into Lehman Brothers?
The question is, if you give me 5 seconds, I can look it up on the computer. You want to give me that?
Sure.
Because I wasn't prepared for this question.
Well, I didn't know I was going to answer it, but you're so smart that you know a lot of stuff. I can look it up too. But it's in the $9 range.
Yeah, no, but I want to tell you. I want to tell you what's going to happen.
Ah, we got a minute.
Well,
Nine. It's under $10.
the price target we're looking for.
Oh, you're doing your research. I'm sorry. Go ahead. I should have known that. You have your own research. Idiot.
It's not that far. It should hold around $8.
Okay.
And the projected low is late February. So if it holds around $8, I don't know. It's not going to be great. It's not going to be the end of the world.
So you're not worried about Deutsche Bank. You're not really worried. You don't think it'll go to zero. You don't think it'll turn into Lehman.
Well, anything is possible. I just, on a reasonable basis, I think it will hold the eight level.
Okay. And so if it goes down to 8, if it shoots through $8, should people be worried?
Then you should really be worried. And if it holds around 8 and it is late in February, it's a buy.
And if it shoots through 8, warning, danger, warning, run,
Then
force,
you have
run.
to be, then I won't say the world's going under, but then we're a major problem.
That's a good bellwether for people to watch. Deutsche Bank. Merkel stepping down out of politics. Of course, she's wrecked Germany. Thanks. Your fine job, Angela. She's stepping down. A lot of people say that has big implications for the Eurozone as well. What say you?
Again, that's not my field. I really don't know. I guess so, but I don't call myself an expert in this. I also don't call the other people experts in this, but I know my limitations, so I don't want to give an opinion.
Okay, fine. Finally, I just wanted to bring up something you brought up in the pre-interview, and it's Robobank. You were a consultant for them in years past, and you say there's going to be news coming out about Robobank that you personally know about. Will you talk about that for a minute?
Yeah, not too much. I worked for Rabobank, and I left in 1998, and Rabobank had a AAA rating at that time. And I have something to say about that, which I'm still considering to bring out or not to bring out. And it's something that keeps me very busy for the moment.
Okay. And is it positive or negative?
Well, depends for whom.
Okay. Depends for whom. You were talking in the pre-interview that people maybe they don't understand. You've got a free trial, which if you're investing money, my gosh, I would be, maybe I would be taking a look at a free trial. Will you talk about your free trial a little bit?
Yeah, so we feel that our research proves itself, so we don't have to do a hard business. So you can write to charlesnenner.com. You can ask for the research. You will get it for free. I don't know how long it is now. I think it's a couple of weeks, maybe 4 weeks. It at least will get you to the difficult periods. Please look at how the work works. We come up with the dates that things go up and down. We come up with the exact levels that they reach when you should go out. And if you like it, then usually after, a month or 2 months, you get a phone call if you're interested. And if not, that's fine by me. It's just interesting for people to know how much knowledge there is that you don't know that exists on Wall Street.
Well, I got to tell you, and I get paid nothing for this. You don't pay me anything. I just have you because you're a tremendously interesting guy. And a lot of times you're kind of counterintuitive to the other markets. Like when I had you on in July, everybody was like, "Oh, rates are going to go sky high. They're going to go sky high." And you were like, no. They're not going to go sky high. Nope. Not gonna. And then the Fed was saying how great the economy was, and you were like, nah, not so good. It's going to turn down. And you were right. And, you didn't think the gold would go down that low, although you thought it might go down to 11 something. I think you said it already, but you think it'll go way up. The upside is, and with gold, the bias in terms of the movement is to the upside with gold, in your mind.
Yeah, but again, if you look listen, I give you one last example. We have hedge funds that say, let's say they want to buy IBM. They do the fundamental work. They want to buy IBM. Then they call us, can you tell us what the cycle looks like? Because we think IBM is good. But why should we sit 3 months on IBM until it goes up? The same thing with gold. If you look at the research, then you don't have to get in not to miss it. We will tell you exactly where the cycle low is. and then you have a low risk trade because you don't have to wait for weeks, because that's a cycle date and that's when we're going to buy. So it makes life less emotional.
You know, so a lot of people think that we got all this debt, or some people think, and we had 160, 170 trillion in debt in 2008. And so we packed it on, according to people like Nomi Prinz and others, to say we have nearly 250 trillion in global debt. And a lot of people say that debt can't be paid. We're going to have a ginormous reset. What say you? Are we going to get a ginormous reset? I mean, we can't just keep packing on debt we can't pay in the world to infinity.
Let's talk about history. In the in the 30s, Roosevelt had the same problem. They had a lot of debt, but because there was inflation, in the end they paid back maybe 15 cents on the dollar. But the problem here is there's no inflation, and is there going to be deflation? And even because of liquidity problems, rates go up, then we really have a major problem, because the money that you owe doesn't go down if there's no inflation. So you have to pay everything back. And that's really very concerning.
And how do you think this could shake out? I mean, there's not going to be any magic inflationary cloud unless they just keep printing money like crazy, I guess. I don't know. Well, how do you think this shakes out?
No, my cycles show that inflation can go back to what we had in the 80s, just not now, but it's coming. And interest rates are going to go to 80, 90, 20% again, just not now. So it's going to happen just based on the cycle. It's too early. And what usually happens is people call wolf, 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 and then finally the wolf comes, and then they miss it so many times. They call.
All right. Well, we're starting to lose your connection, but I think I'm going to break it off right there. Charles Nenner, CharlesNenner.com, the Charles Nenner Research Center. Charles Nenner, thank you for joining us today. Very interesting talk. Very interesting. Thank you for joining us today on USAWatchdog.com.
You're welcome. We'll talk again.